How's it going, fellow traders? This is Magic Trader, and this is the CFTC report for September 26, 2017. Here's the data that was posted. Right here is a snapshot of the data of the hedge funds. And so let's take a look at what the hedge funds have been doing with their positions. So first of all, let's start by looking at gold. What do we see is that over the last few weeks they've been declining their longs, right? We reached a high of 351,000 right here, and since that point we've been dropping in price, and so they've been closing off their longs from 351 to 330 to now 303. But longs are still aggressive. Shorts are cooled off. In fact, they've reduced their shorts. So if price is falling and they're reducing shorts, that's pretty much a good sign that more longs are to come. Okay, so profit taking obviously happening from these highs, which was good. So they're holding positions all throughout here, taking profits at these highs. Price retracing and pulling back down. They're closing off shorts because they're not expecting price to drop, so they're closing off their short positions. And I believe somewhere in this area they're going to start accumulating their longs again, and then we're going to see a move to the upside. Okay. If price continues to drop down on gold, then this is going to be the new area of demand right here. And then I'll remove this one here. So watching gold for possible long entries, since the net positions very much bullish, positive 212,000, and long exposure sitting at 77%. So very good sign to take longs on gold. I'm just waiting for new long setups to present themselves. So for oil, what do we see? We see that they have increased their longs from 678,000 to 698,000, and shorts have become closed out right through here, from highs of 297,000 to lows of 244,000, increasing long exposure from 70 to 72 to now 74%, and net positions up to 454,000 positions net long. So we're hitting weekly supply, and now we're pulling back. The daily is overextended, so very good chance we get back down to these areas here, and then from here further up in price. So I'm watching for long entries. I'm waiting to see if we're going to get some new long setups forming on oil. I would prefer to take long positions down in these areas here. If price gets down there, then I'm definitely going to be looking to get in long on oil from that area down there. Okay, so US dollar, what are the institutions doing? Well, they have increased their shorts from 33,000 to 35,000. Okay, so we're sitting above average for short positions. And if we look at longs, they also increased longs. So that happened as this candle consolidated here. So they increased longs, which causes price to head into the weekly supply area, and increasing shorts. So they are hedging by increasing longs and increasing shorts. They're getting a better price on their shorts. So 55% of their overall exposure is geared to the short side. Net positions is only negative 6.6 thousand. But remember, we knew that the US dollar was going to be dropping by looking at the data all the way back here in June. Okay, in June was the big sign that price was going to be heading down, and the institutions were bearish, with a strong bearish bias. All right, but if you've been following along, right up here we knew price was going to drop right at the turn. Right there, we had a weekly CP supply zone that came into control that was nested within a 3-month CP supply zone. So right down here we were talking about a big drop in the US dollar. So we definitely called it the exact top there, and it's just been downwards ever since. So bearish bias. I'm looking for new short setups within this weekly area of supply to take price lower like this, because everything is showing me that price is going to continue dropping. So looking for new setups to take price lower. Alright, what do we see with the Aussie? So Aussie US dollar, we see that they've increased their longs just a bit from 102,000 to 103,000. They closed off some of their shorts, so close off shorts as price starts to decline, and they're increasing longs as price begins to decline. So what ends up happening is long exposure is now 80%, which is super aggressive, and net positions jumps up from a positive 72,000 to positive 77,000. So they're extremely long biased. I'm looking for long setups to form in this area to take positions upwards. If that doesn't happen, then I'm definitely looking to get in long right down this weekly area of demand, where we know that the institution's filled about 14,000 of their long positions right there. Alright, so now let's take a look at the US CAD. So short positions increased by 2K, and they close off a massive amount of their longs. So price rallies up from demand, from a weekly demand zone, and we now head into this weekly area of supply that hasn't yet moved 2 to 1 away, so it's not a very high quality weekly supply zone. But we also have the weekly 20 EMA right here, and we have short positions at 79% of their overall portfolio, and we have a massive jump in net positions from a negative 58,000 to negative 74,000. So they're definitely looking to take this lower. Alright, we're still sitting within a 3-month area of demand, so waiting for this one to really break. Once this breaks, there's nothing to keep price from falling down to here. So looking for new areas to get in, new setups to be formed on the daily and 4-hour. I believe there's a daily demand zone here somewhere. Once that gets taken out, then I'll be selling pullbacks or selling rallies to take this one further down. But definitely the bias is short, and it's by a huge margin. Swiss franc, this one's a mess. It has been a mess for a long time. Neutral territory. We're reacting from a monthly area of demand, hitting trend lines. I mean, there's nothing here to see, so I'm not even going to bother. Euro USD, what do we see? A slight drop in longs from 190,000 to 183,000, but that comes as profit taking happens here at these highs. So as profits get taken, we get a slight drop in price, and shorts drop from 127,000 to 95,000. So that happens. Shorts drop up here, so they're planning on taking this a little bit further, it seems. Percentages long is 66% of their overall portfolio is geared to the long side. Net positions increase from 62,000 to 88. So it looks like we're going to take price higher. Looks like that a bigger pullback is not going to happen. So I'm looking for new long setups to form for me to get in long like that. Pound, this is a nice chart. Increases in longs, so the institutions increased their long positions from 76,000 to 80,000. They're also declining their short positions over the last couple of weeks from 115 to 86 to now 75,000. So we're starting to enter into cool territory. So the last 2 weeks there's been a clear bullish bias on the pound, and this week we now have net positions in the positive 5,000. So I'm looking for new long setups to get in here to the upside. We have this area here that didn't consolidate away, and we're now getting a price to retrace back. In fact, let's take a look at that right now. Alright, so this is what I see here. So if price comes right back here, so So if price comes right back here, then the new area of demand will be there. If this comes right back here and touches this area, and then that will validate this area of demand. So I'll be able to take longs here. This would be a great area to take longs right down here. Boom. And then looking at the daily, this isn't demand, so I have to wait for confirmation off of here. But I'd set trades down here. I would set trades off of that. So I'm waiting to see what's going to happen here, but definitely I'm looking to take longs on the pound, just waiting for new long setups to form, and then I'll get in. US dollar, Japanese yen. So we see a major increase here in longs from 93,000 to 114,000, becoming super aggressive. Short positions just remaining cooled off. All right, 42,000. So we're sitting just above the average position, or average size for shorts, and longs are just still sitting below average size for longs. Okay, long exposure is 73% of their portfolio, and net positions are up from positive 51,000 to positive 71,000. But here's the deal: we're sitting at a weekly supply zone, and we got a trend line confluence right here. So I'm expecting price to drop, even though they are long biased. Coloration of the cells just slightly bullish, but the fact that we're hitting these two areas of confluence, I'm not looking to open up any positions on this pair. So we look at now New Zealand, and what do we see? Short positions remain to be very cooled off. In fact, there's a drop from 16,000 to 14, and long positions are also cooled off. Okay, at 22,000. Short positions are above average size, long positions are below average size. Increase in long exposure from 58% to 61%, and also a slight increase in net positions from a positive 6.6 thousand to a positive 8,000. So right now we're reacting from a weekly supply area, and we're dropping. Here's a monthly demand area, so we're in between supply and demand. So when price is just floating in between areas like this, it's not a good idea to take any trades. So I'm not taking any trades on this. I'm not waiting for any type of setups. If price was to drop down here, I'll get in long. Otherwise, I'm not doing anything on this one. Alright, so that's pretty much it. We have some data coming out on Monday. Aussie rate statement coming out. And then we have NFP coming out on Friday. So that's pretty much it, guys. Hope you have a great week, and we'll see you next week.